PBM is one of the most complicated concepts out there, and it's incredibly difficult to understand. But it's not because the system itself is complicated, it's because PBMs make it complicated.
Welcome to Self-Funded with Spencer, sponsored by Pareto Health, ClaimDoc, and PlanSight. Whether we're discussing innovative new healthcare strategies, exposing hidden revenue streams or misaligned incentives, or even just cheering on the next generation of this industry, we promise you that you're going to learn something. So thank you for joining us for another great conversation about the future of healthcare. Yeah. Well, in a world where you would attract business based on the quality of what you're delivering, of course, right, but the price in which it's delivered as well. That's what we might call value right. in a normal world. But enough about, I'll get off of my soapbox of rebates. Let's get back on ServeURX a little bit.
Sure.
So as a company, as an organization, what types of business are you going after? Like, what's the right kind of employer? I presume they're self-funded, size range. Let's talk a little bit brass tacks.
Yeah, so we service primarily commercial self-funded groups. About 80% of our clients are between 200 covered lives and 5,000 covered lives. Mm-hmm. So it's all mid-market employer group business. And our kind of slice of the market is those that want a highly customized benefit, care a lot about service, and care a lot about flexibility. So they want the ability for, our philosophy is we seek to say yes, regardless of what the question is. Yeah. So if somebody wants to put in this benefit that works best for them, or if you work with a point solution that you think works really well and you want to put that in, we're not going to get in your way. Mm. We'll build the benefit around what you want versus saying, here's my benefit, what I say
take
goes.
Take it or leave it. Yeah,
take it or leave it. Or you're working with this TPA, so you're forced to work with me, so here's your benefit, whether you like it or not.
Yeah. Well, you showed me your business card, and I love your tagline, for you, yes.
Yes,
Rich,
exactly.
I like that. I mean, it suggests what the spirit of your company is, right? Is a willingness to do what you need to do, what's best for your customer, right? Even if it might slightly disadvantage you as a business, which I appreciate. At the end of the day, you want to be a really good PBM partner for as many people as possible.
Exactly.
And you do that by being trusted and having credibility and all those things. From a structural standpoint, are you guys geographically concentrated mostly to the area of Milwaukee and Chicago, or are you guys across the country?
So we're nationwide.
Okay.
About half our business is in our own backyard. The other half is everywhere else.
Oh.
So if you would have asked me 10 years ago when I first started, it was primarily in the greater metro Milwaukee area. But now we're very geographically dispersed, and we've got membership everywhere in all 50 states.
Okay. Oh, and so how do you stand out, though, in this noisy world of PBM? Did you say there's about 85 PBMs or something?
I think there's about 85 PBMs. There's probably new ones.
That's what I'm saying. Yeah.
By the day.
Oh, a new one just popped up. Yeah, a new one just started. But then how do you stand out in the world? Obviously, you guys have a long track record of success. You've gone through a little bit of a metamorphosis, if you will, in the last couple of years. And then being historically concentrated to an area. But then you have all these new startups, fly-by-night PBMs that are starting up all the time. How do you stand out in a world like that that's noisy?
So one of the things that we have is our track record and the fact that we own all our own assets. When you call our PBM, it's one of our employees that picks up the phone, which is less common than you think with a lot of our peer companies. And a lot of it is seeking to say yes, right? So we stand out not by saying big PBMs are broken, we are the solution, because there are certain things that big PBMs, they're big for a reason, right? For very, very large groups, they do a lot of cool stuff. For small to mid-market companies, they don't really do that cool stuff. Mm-hmm. They may not be a good fit. But we focus on what we do better versus what they do worse.
Okay. Well, you said a lot of the market's doing the Mark Cuban thing right now, which is big three bad.
Yeah,
right?
big three bad. Small PBM good.
Good. Yeah. Right. Which I guess that's a way to simplify it and draw a distinction. But ultimately, but there's obviously caveats there. Right. So you don't necessarily take that approach. And like you said, those PBMs can serve a purpose at scale and things like that.
And those players, there's plenty of people delivering that messaging. Mark Cuban, and there's a whole lobbying group dedicated to saying the big three PBMs are bad. They don't need any help, right? They're doing just fine. There's plenty of messaging there. There was just a pretty harsh article published by the New York Times Friday of last week, and so it's very well documented where big PBMs don't do well and what they're doing wrong. So we want to focus on what we're doing right.
Right, and I think there's enough lawsuits out there right now that's
Right.
suggesting that harm is being done as well. So we have to let those things play out. And,
Exactly.
I think the exposure is there. So yeah, it's no longer really unique for you to be pointing fingers at them anymore.
Right.
And so you have to go back to the drawing board and just be better at telling the story. What do you feel like from an employer perspective, outside of size, right? Anybody can say what size. Who fits with you? Like what employers are long-term clients and why, and what do they seek, and what value do you feel like they're getting from you?
It's employers that are focused on service, and they want to take control. They want to take the steering wheel. They're not passive.
Okay.
I'm just going to do a market check. I'm going to get the best price from whatever PBM it is, and that's how I'm going to run my benefit. It's people that want to take the steering wheel. They want to get off the hamster wheel of either fully insured or whoever they were with prior, and they really want to take control. And what can I do to drive down my per member per month drug expense versus focusing on who's going to give me the highest number on the page, or who's going to give me the lowest number on the spreadsheet, or who's going to pay me the most rebates. We are the best option for those who really want to go after it. And even though they are a mid-sized employer group that may not have the resources of very large organizations, they want to run it like a large organization because they want to get the value out of their self-funding.
Okay. Well, and so can I go to a subject here? You mentioned of the flexibility. I want to go back to that in the point solution question. When we say point solutions that can be bolt on, let's talk about an example, like a patient assistance program or something like that. What do those point solutions look like, and what makes you guys so flexible in being able to partner with them?
Yeah, so we have our own patient assistance program, alternative funding program, specialty patient advocacy.
And what does that mean? Why don't we just define what that means?
That is when you exclude certain specialty drugs from coverage. Those members would then be sent to manufacturer assistance programs. They typically have to pass a means test, so they have to be within a certain percentage of the federal poverty line, and they either get approved, and then they get 100% of the drug's cost, or they're not approved. We've got to figure out where they go next. But it's essentially taking that claim, moving it off the plan, and getting that member drug, the drug essentially for zero cost.
Okay.
A lot of different companies do that. We have our own program, but our program may not be for everyone because and without getting into the specifics, we run our program a specific way. It has its own parameters. If someone wants to go beyond that, where they say, well, instead of specialty drugs, I want to also include anything that's over a certain dollar amount. And send those to this program too. In that case, it's not a great fit for our program, but we have other solutions that we can plug in that would work for that. So I think Sharks was a previous guest on the podcast.
Paul's on.
So, maybe we send it to Paul, or maybe Payer Matrix or Script Sourcing. There's a number of different firms. They all have a slightly different way of going about it. So depending on what the employer is comfortable with, and what objectives they're looking to achieve, we can direct them to the point solution that is going to be the best for them.
Well, it's almost like you have a situational bullpen, to use a baseball analogy, because I went to a baseball game last time. It's like, we need the lefty here. We need the guy that can just go get one out, right? Or then, oh no, we need somebody that could do pitch 2 to 3 innings to get to us to our closer, right? There, you have this bullpen of these partners that, in the event that they actually might deliver what that particular employer needs in that scenario, you can pull them in as needed. And I love that, because what you want is for them to get what they need, them meaning the employer. And if that means going to a partner or, an alternative solution, so be it.
Right.
And Pareto Health is the largest benefits captive in the United States. With nearly 3,000 captive members, $1.3 billion of stop-loss premium in force, and almost 1 million covered lives, no other benefits captive comes close to Pareto Health's scale. But it's not just about the numbers. Pareto Health is a mission-driven organization, and that mission has 2 distinct parts. Number 1, to make self-insurance simple and more accessible for small to mid-sized employers. And number 2, to arm them with the most powerful cost management tools on the market. So if you're an employer frustrated with your healthcare outcomes, or you're a benefits consultant looking for an alternative to the status quo, it's time to consider Pareto Health. Pareto Health, where employers come to do self-insurance right, to do it easily, and to do it at scale.
And then going back to transparency, we we don't take steerage fees from anybody to do that. So we're not influenced by who's going to pay us more.
Yeah.
We're just influenced by what results are they going to achieve.
Well, on the subject of steerage fees, what are other hidden fees that maybe we haven't addressed? There's a number of different ways that money can be siphoned out of the system. So what are those ways?
Oh, there's the usual suspects where, for example, on the rebate side, now the big three PBMs don't hold the rebates. Now these GPOs hold the rebates. They're based out of typically Ireland. And they take fees before they pass them through to the other PBMs so that they're able to take some of those fees off the top. There's this new phenomenon with the big three PBMs. I think CVS was the pilot of this, where they're co-manufacturing and they have separate deals for the biosimilars.
Okay.
And those may or may not steer some fees outside of the typical pharmacy benefit to the PBM that's doing it. I mean, it's like whack-a-mole.
It is, really.
The second you close one loophole comes to light, another one springs up. So those are the latest and greatest.
Well, that reminds me of my 3-year-old. He's about to be 4, Bash. He has become aware and obsessed with coins and money, everything. And so this kid, I kid you not, everywhere we go, he's eyes on the ground and he's picking up a penny or a nickel or something. And he gets so excited. But what you're just describing to me is like all the different ways that they're just finding money in the system. But then you start to question, well, like, is any additional value being delivered at all? In those circumstances, right? And all people want is to feel they got treated fairly.
Right.
And it's so much harder these days to prove that that's happening with some of these arrangements. And then once you uncover, oh, this thing is happening, well, they just steer it over here or they set up a GPO or whatever. It's just like, it's never ending, unfortunately. And so I love to sit down with people that at least I don't know you that well or I don't know your business that well, but seem to be doing business the right way.
Right.
And so I have a shared philosophy around that. Can we get into a couple subjects of like particular drugs that are relatively hot right now? You mentioned Wegovy and Ozempic earlier, but I really want to talk about that because there's this huge blip in excitement, and then there's been kind of some settling of the excitement now, and now there's some generics that are coming out, and I think Mark Cuban might be compounding one of them. And, there's a lot going on in this space, but it's still a drug that I think is worthy of addressing. So let's talk about the GLP-1s. Real quick, what does it do? What's a GLP-1? I know you're not a clinician, but if you could just define it.
Yeah, so GLP-1s, the long and short of it is it changes the chemistry of how your body works to reduce blood sugar, and it reduces some of your brain chemistry where, food isn't necessarily as enticing as it previously was. It doesn't make you feel as full. I'm not a clinician, so I'm not going to get into the chemicals of that, but one thing is very effective.
Yeah, it's very effective.
It's very effective, but it has some particularly unpleasant side effects. And for that reason, it's not the cure. It's not just the
It's
magic.
not a panacea.
It's not a panacea for all of the United States' problems, as the manufacturers would lead you to believe.
Yeah, and so the early stages of this becoming, at least on my radar, was, hey, now it's got an application or an off-label usage that's now been FDA approved. So it used to be for those that are type 2 diabetic, and now it's for weight loss or approved, or certain ones are approved for weight loss. And so you had this massive uptick in demand, which then left, there was supply issues, right? So there were supply chain issues and the quantities weren't there, and whether or not employers are covering them nowadays, that's a separate question of they're going to cover it. But then how do you think this thing shakes out, right? What do you think the other side of this is now that the demand seems to have, I don't know if it's settled, but the noise is settled? What do you think we're going to see in terms of actual clinical outcomes or efficacy or side effects and lawsuits? I mean, do you have a forward-looking vantage point that you take with these things?
So that's a very interesting question.
Yeah.
I think there is a lot of pent-up demand because a lot of employers don't cover Wegovy for weight loss. And I think there's growing pressure for employers to cover it, as there's a study a month about some other magic improvement and some other thing. I think latest thing was sleep apnea. It helps with sleep apnea and has a lot of great clinical outcomes.
Yeah.
So there's going to be greater pressure for employees to cover it. But one of the things from the early adopters that covered Wegovy for weight loss, and GLP-1s in general, I don't want to pick on Wegovy, is that the persistence rates are quite bad. to the point where I think there was a study done where only 30 to 40% of patients that were taking a GLP-1 for weight loss actually were still taking it a year later, meaning the employers that paid for that got no value from it.
Okay.
Because this is a drug you have to be on indefinitely, essentially.
Okay.
And it's quite expensive. So either for supply reasons, side effect reasons, or what have you, not a lot of people stay on it because they're not quite a, when people say the rumor that Oprah lost a bunch of weight and it was because she was on Ozempic, it doesn't say all the side effects Oprah saw along the way. And at the end of the drug commercial, when they read all the side effects really, really fast, there's some serious ones.
Serious ones, yeah.
And
what I think typically happens is reality doesn't always match expectations with the way some of these things get promoted, right?
Exactly.
And the reality is yes, some people are experiencing some pretty significant side effects. And the thing that I think be very clear about is there's absolutely some folks that will benefit. And even if there's trade-offs in utilizing a GLP-1, they probably alternatively may not have achieved the same weight loss results had they not used it as a catalyst of some sort. So I think it's important to say there's probably still people that truly benefit.
Right.
But for it to be anybody that wanted to lose 7 pounds prior to the summer, probably not a good idea that we suggested maybe that was a good use case for it, right?
Right. And I have a family member that is a successful case of a GLP-1 where they had uncontrolled type 2 diabetes. Not a lot was working. They were put on a nutrition coaching program, started going to the gym, doing all the other things you're supposed to do from a lifestyle standpoint, started taking the GLP-1, and now they don't take any other type 2 diabetes meds.
So no insulin, nothing.
No insulin, nothing.
You said earlier.
And A1C is within normal levels. So that's a success story.
Did they lose weight as well, I presume?
Yeah. Not like the massive amount of weights that you see on TV, but enough weight where you can notice.
But that's absolutely a success story. Even if it's just we traded off multiple drugs for a single drug, it lost some weight, right, but got our A1C under control. That's absolutely, you would say that was a successful use case for that drug. And so these things do happen, right? I'm just wondering if the long-term outcomes will be some significant lawsuits, some really severe side effects maybe that don't materialize for years of use, or maybe there's some abuse that happens, and it's just now the industry will move on to something else or something new. I would think what it really speaks to, and you were alluding to earlier, is now it's for sleep apnea, now it's for this. It's if people just probably lost the weight, I think those symptoms are likely a result of the obesity and overweight epidemic we're experiencing. So what it also suggests is maybe the GLP-1 is a mechanism to get to what we really needed to do, which was the losing of the weight for those things to go away. I'm not a clinician either, so let me just go ahead and say that. But I think that might be what's actually happening.
Yeah, and I think the future for GLP-1s is going to be prescribing them in conjunction with some of these other programs to make sure the lifestyle part of it goes along with the GLP-1. Because if you just take a GLP-1 in a vacuum, you probably are not going to achieve the outcome that you're expecting. It has to come with everything else. There's the old adage, there are no shortcuts to success.
Yes.
So it's not a shortcut. You still have to do other things in order to achieve the health outcomes that you want, even if there's a drug that's very, very effective at helping you reach it.
And I wonder if even there's a placebo effect at play, right? It's a mental catalyst to say, I'm going to lose weight now, and I'm going to watch what I eat and the amount what I eat. I mean, some of that might be coming into the fold. And again, I don't want to belabor too much about GLP-1s. It's just one of those, we're here in 2024 in June, right? This is a topic that's on everybody's mind. The other one that I think is worthy of talking about, although technically not a drug, is this category we call gene and cell therapy, right? Which is the big, scary, bad wolf on the street right now because of the price tags associated with these things. So kind of give me some perspective on what you think is going to happen there, how we handle the risk pool around that stuff. What do you see?
So what's interesting is if you talk to stop loss carriers, who are usually the ones that are most impacted by this, because it's unlikely any given employer group is going to have to foot the $1 million bill for one of these cell and gene therapies. If you talk to the stop loss carriers, you get one of two reactions. Either the sky's falling, if they're small, maybe don't have the risk pool they need. And then some are just like, yeah, that's why stop loss exists.
Yeah.
And I think what it'll necessitate is really looking at the reinsurance side and making sure that you have a cell and gene therapy strategy, whether it's I exclude them from coverage. I send them to a center of excellence. I, have the TPA has to put in these certain plan edits to make sure we're doing all the stuff we need to do ahead of time before it's approved and not just kind of waving it through.
Yeah.
And making sure that you're in a diverse enough risk pool where it's not going to cause problems on the reinsurance side.
Yeah, the diversity of the risk pool is the thing for me, and that's the vantage point I think we take at Pareto is the size of the risk pool, but then the diversification within it. Those particular claims haven't risen to the level of frequency that they're too scary at the moment. We did have somebody come to one of our recent members meetings and talk. They're in, I think, Emergent Therapy Solutions, ETS, I think that's the name of the company. And they're in that space of the management component of it, right? Which is, that's from the identification of the member, gauging appropriateness of the application itself, the center of excellence component, the follow-up component, even the warranty component, which now is an emerging thing as well. They're so complex and complicated that you get down to the minutiae. There's just a handful of people that are probably appropriate for each one of these therapies.
Right.
So I don't know. Maybe the industry and the development of these becomes so repeatable and scalable that now the application becomes so broad and now they're pervasive enough to scare me. But I don't think I'm too concerned, at least today, that they're that big a deal.
Yeah, and there's a very robust pipeline of these therapies in the future. And for some conditions where there's a lot of people, I think sickle cell is one of the gene therapies they're working on right now. That'd be a big deal.
Right.
A lot of people with sickle cell.
Right.
So it's a matter of just making sure that you're not flat-footed, and reinsurers are going to be the first ones to look because this is going to impact them the most. And there may be, there's a cottage industry of gene therapy specific stop loss where it's sometimes the big PBMs or the stop loss carriers themselves underwriting that risk across their entire book of business because they might have more data to reduce that risk. They might be able to take on more risk that a stop loss carrier that doesn't have all that data might be unwilling to do or might price it at a higher price point.
Yeah.
So what you'll see is a lot of these big healthcare companies use their data and their predictive analytics to help drive down the cost of insuring that risk. So it's concerning, obviously, but I don't think it's quite the sky is falling phenomenon that some folks are making it out to be at the moment.
Yeah, I think you might bifurcate the market a little bit, like you said, where if you have a big enough risk pool, it's not that concerning. But if you don't have a big enough risk pool, one or two of those absolutely could put you in jeopardy pretty quickly, right? So then you start thinking about how they're reinsuring those contracts and what's your reinsurance level, or is there a separate pool? I don't like the separate pool because to me it becomes an opt-in situation, right? And then you're paying an additional amount of money to opt in for something that should have been probably covered already, and then they'll know how to price it based on their own exposure to still make money off of it. It becomes a separate revenue generating line item for a carrier or a PBM. And so I don't like that. I don't have the answer either, so I'll be the first one to admit that. I just think it's worthy of discussion, especially because of some of the price tags associated with it. And the presumption is the price tags, I think 4.25 million is the most recent biggest one to emerge. And then I'm sure there'll be the 6 million, and then there'll be the 8 million. And what's the breaking point of these price tags before people go, I'm not even, ignore, you know what I mean? So I don't know where we'll go from here. It's just so early in the stages right now.
PlanSight is a complete game changer in the world of insurance brokering. As a broker, you know how time-consuming and error-prone the traditional RFP process can be. But what if I told you there's a better way? PlanSight is the only end-to-end RFP solution on the market made specifically for benefits agencies. It's like having a superpower that gets you an average of 8 to 10 hours back per employer renewal per year. And the best part? PlanSight supports all carriers, all funding types, and all group sizes for over 20 different benefits. If you're ready to make your RFP process faster, more efficient, and more profitable, it's time to call PlanSight. Visit plansight.com now to book a free demo and discover the future of insurance renewals.
Yeah, and the other challenge with these really, really expensive therapies is I think the average person switches employers once every 2 years.
Yes.
And if I just paid $2 million for Luxturna, which I think cures a certain type of blindness, and then the person leaves, I just lost a $2 million investment. And if I'm a small employer group, I might not even make $2 million in a year.
Yep.
and my $2 million claim just walked out of the door. So it kind of almost turns the entire system on its head because you're paying for a benefit that you will likely never receive.
Yeah.
And that's one of the problems with the current healthcare system that we have, where it's all these private insurers, is why would I pay for something you benefit from
The
later?
churn. Yeah,
Yes.
the churn component. I didn't mean to do this like wrap it up. I meant I was doing a hand signal for churning, which really is a problem. Because why am I paying for something that on average the employees may not be here 3 to 5 years from now, and therefore I'm paying for something that they benefit from, and then they leave, and the next employer gets the benefit of that point solution being paid for by me.
Right. And that's why a lot of these wellness point solutions have such a difficult time breaking in, and why you need innovative employer groups in order to adopt them is it's really hard to show an ROI for that unless you see something, unless they have some immediate result they can prove. You're essentially paying for this benefit with the hope that the employees stay long enough for you to see the ROI on it.
Yeah, yeah. It's not a good value proposition for that employer, right? So you really got to care about how much can I enhance my benefits to attract and retain employees?
Right.
ROI be damned, in that situation. And some employers might take that approach, but not all of them. In the interest of kind of inching towards the end of the podcast and staying in this future-looking realm, what do you think the future of PBMs might look like in the next few years? Because just like this whole space is going through an evolution, consultants, what they're expected to do are going through evolutions, captives in my space are emerging. PBMs are going to be pressured to evolve and maybe add services and things like that. So what do you think might be happening or is even happening and being asked of you right now?
So I think PBMs just are under a lot of regulatory scrutiny right now.
Okay.
So the business practices are going to have to change regardless. What that's going to look like is more than likely there will be a convergence on everyone moving to transparent or pass-through pricing. Certain states have already mandated it. Some states are about to mandate it. Additionally, I think the way rebates are handled are going to have to change, whether it's they're paid at the point of service, they're required to be paid 100% to the employer group. That's another way they're going to have to evolve. And I think personally that PBMs are going to have to be more flexible and more nimble because there are a lot of point solutions coming out. And I'll use, for example, right now, there's patient assistance programs, there's international sourcing programs, there's, these 340B programs where you send people to get drugs at 340B discounts. All these came to prominence fairly recently, and the PBMs that can move fast will leverage those before they get regulated away or become so commoditized that they don't really drive a whole lot of value. But the PBMs that are flexible and can move quickly and can integrate with these various point solutions will show a lot of value, and they'll be the ones who come out as the quote-unquote winners.
Okay.
They'll be the ones that grow versus the people that try to stick to the old guard, the old way of doing things. I think those PBMs are going to get smaller.
Yeah, I would suspect you're probably right. And, and regulation always plays a role, though. You always have to brace yourself when new regulation gets passed because there's always unintended consequences of said regulation. And then a new cottage industry pops up to take advantage of a loophole or something like that. So who knows exactly what's going to happen there. If you were to think about a moonshot for you as, now the CEO of ServeURx, this 25-year-old company that you've picked up the helm for, what do you want to accomplish personally in the 5 to 10 year horizon?
So in the 5 to 10 year horizon, I want ServeU to be the PBM of choice for mid-market, self-funded employer groups that want to take control over their benefits.
Okay.
So they don't want the out-of-the-box solution. They want to take control. And if I want to take control and have a good level of service and keep my members and, for brokers, keeping their clients happy, they think ServeU is the option for that.
So it becomes synonymous with that.
Yes. Okay. Where if you want to take control, if you want to take the steering wheel, we would be the PBM that you would choose for that because we have a large range of tools available for you to achieve your goals. And ultimately what I want to do is risk sharing. Right?
Okay.
So if I say, if you put in these programs, I think you're going to hit this much not in savings, but you're going to have this much in spend. So focusing more on what your actual spend is versus what's your discount or what savings will I give you over your previous PBMs when I run it through my arbitrary repricing tool? What amount are you actually going to pay per member per month if you put in these solutions given these constraints? And that way, you don't have to take my word for it. that's what's in the contract, and that's what I am putting money behind that you will achieve. And if I don't achieve that, I will pay you and I'll work for free, basically.
So you're tying yourself to outcomes, right? And
Exactly.
like I said, it's not just savings, but lowering your actual spend. We track average spend across our block of business, and we'll talk about that sometimes, in sales settings and stuff. But I think that's the way to focus on. Who cares how much you saved or was discounted? It's like, what did you actually spend, and is that spend going down over time?
ClaimDoc is a medical claim auditing and member advocacy company. We provide fiduciary services to employer-sponsored benefit plans, and allowing them to create an environment where we ensure that the benefit plans are being charged in a fair and reasonable basis.
My business is basically people, and it become a real simple transition. We thought it was going to be far more complex. I've saved, we'll say, hundreds of thousands of dollars. I could not say enough about ClaimDoc.
Right, and I'll give kind of a funny story where a lot of times when someone's doing a market check, they'll look at the previous 12 months, they'll give it to a bunch of PBMs, hey, reprice this over the next 12 months. Well, the pricing changes, the drugs and the mix changes. A lot of times we'll show savings if we reprice our own claims compared to last year.
Yeah.
That doesn't mean they're paying any less. It's still the same people, same claims. Just market dynamics might make the savings go up because drugs got more expensive. So wouldn't it be great if we focusing on what the actual cost of the medication was, and here are the tools you can use, and here's how that will decrease that bottom line number. And then it's more predictability and far more control than a mid-market employer group would otherwise be able to have.
Yeah, and I like the fact that you're tying to, if you out-deliver on that expectations, there's a financial incentive, and if you under-deliver on the expectations, there's a financial disincentive for you.
Yes.
So you guys could put your own fees at risk, which again aligns harmony with what the employer is trying to accomplish.
Exactly.
Which I appreciate. And so the last question, and then I'll ask you for your closing thoughts, is it sounds like you guys, you want expansion is in your mind, right? You want to be the one in that category, where some folks might say, well, no, we're happy sort of swimming under the radar, and we're happy playing in our pocket, and we just want to incrementally grow. So what makes you want to expand? Like how come that's a big part of your vision? I mean, other than, you want to succeed, which I appreciate, but what makes you want to do that and be kind of public about that?
Because there's a need for it. And I think I saw a statistic last year where the average net promoter score of a PBM is 8.
And what is it passing, like 90 or something, or what is it?
It's a scale of negative 100 to positive 100.
Okay.
Average score of PBM is 8.
So at least it's not negative. I mean,
it's not negative, but it's 8, right?
It's 8.
These technically get degrees, but it's not negative.
Yeah.
And so there's a huge need for a PBM that focuses on the member and the client.
Okay.
Because there's a lot of PBMs out there that say big PBM bad, small PBM good. And that doesn't mean they deliver on the service, the spend. So there's just such a need for it out there that I feel like we'll always find new clients, because as institutions exchange PBMs, there's a lot of private equity money currently in the PBM space. That in itself influences behavior.
Yeah.
And we think that purely independent approach. We don't answer to Wall Street, outside investors. We grow at the rate that we want to grow.
Yeah.
And we feel we can grow while doing the right thing. And that, I think, resonates with a lot of mid-market employer groups where they may feel like, yeah, I signed up for this PBM, but then the ownership changed, and I'm just not getting what I used to get. And so there's a huge market, not only people that are currently with the big three or carve-ins, but also people that are with other mid-market PBMs where they feel like, like the PBM I worked with, they're kind of different now. And we think we can capitalize on that as well.
Well, that's awesome. I mean, it's good to plant your flag and say, this is who we are. This is what we want to be. This is who we want to work with. And the narrative, at least that obviously I've heard over the last couple of hours, is one that I think resonates well with me. And so I'm very hopeful that you succeed on that mission. Why don't we do this, Justin, closing thoughts? Like, what do you want to leave the audience with before we jump?
Yeah, so PBM is one of the most complicated concepts out there. And it's incredibly difficult to understand. But it's not because the system itself is complicated, it's because PBMs make it complicated. So regardless of which PBM you're working with, when you're looking at pharmacy spend, make sure it's someone that explains things in a way that you understand it, right? Whether that's ServU, whether that's somebody else. There's a lot of other great PBMs out there. Make sure you understand what you're getting. And if it sounds too complicated and your eyes are glazing over and you're like, I don't understand what this guy's saying, pick a different PBM.
Yeah.
If they can't describe it to you and if they can't explain it to you in a way where it's straightforward, simple, and you know who's getting paid, what they're getting paid, what the outcomes will be, then chances are, if it's either too good to be true or it's too complicated to understand, then you're probably not getting what you think you're getting.
Awesome. Well, that's brilliant, man. Well, I appreciate you coming down from Chicago. I hope your trip back is as smooth as the way down. And I appreciate you coming on to tell your story. It's been great to get to know you, man. And I wish you nothing but success.
Thank you very much. Glad to be here, and thanks for having me.
My pleasure.